Hello and welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Tjornehoj. For the week ended June 25th, 2014, mutual funds and ETFs alike had solid, if maybe a little underwhelming, inflows. Let's take a look at our macro groups and see how mutual funds did this week. Starting off at the top, equity funds had $620 million in net inflows. Taxable bond funds had $3 billion in net inflows. Muni funds had $239 million, and money market funds took in $4.7 billion. Well, as I said, it was a good week for everybody. They were positive, yet it was rather underwhelming in certain areas. Equities, of course, would be the ones to second guess, because with $620 million, after a couple weeks of good performance, what with the S&P getting close to a new record, the Dow staying near 17,000, one might think that retail investors are starting to get kind of excited about equity funds, but they really haven't done that for the last several weeks. We've had 4 of the past 5 weeks with less than $1 billion a week going into equity mutual funds, so we're waiting for people to show up, if you will. So again, a flat week for performance, though. Maybe that kept people at home. Let's take a look at some of the detail here. We saw the VIX this week touch a 7-year low, so that kept a lid on volatility and, of course, performance. And there wasn't much otherwise to cheer about. Domestic growth saw significant outflows this week, about $1.2 billion. That's quite a chunk of change for them. And that's including large, mid, and small cap growth categories. On the plus side, we saw alts take in some good money here, with long short equity taking in a couple $100 million. Interesting to note, though, that we have not seen the follow through from all the alts categories that one might have expected, given the trepidation by equity investors out there. So we'll keep our eyes on this to see if things start to perk up over the next couple of weeks. Well, the next group to take a look at is equity ETFs. They too had inflows this week, although at $915 million, again, fairly underwhelming. Investors were drawn to diversified products. We saw IWM take in about $915 million. SPY followed with about $1.4 billion. I'm sorry. IWM had $1.4 billion in inflows. SPY had $1.2 billion. So overall, the pretty good numbers up at the top. When we get to the bottom, though, it's a little underwhelming here with a few of the names. Techs considerably, and other areas such as, QQQ led the outflow parade. So techs were rather disappointing to investors. They tried to bail out of them. Next group to take a look at is taxable bond funds. Again, inflows this week of about $3 billion. That's pretty good. In fact, things are trending up. Each week of the past 4 weeks has been getting better than the last, as you can tell from the chart. So pretty good performance this week, nothing to write home about. Overall, we saw general bonds take the most this week with $780 million. A good portion of that belonged to GMO's global asset allocation bond portfolio, which had about $500 million in net flows this week. So either investors are really tuning into a portfolio that is significantly, and it's about 95% tips funds. It's kind of a go-anywhere fund, but it's got a huge allocation to tips right now. And either they find that very interesting, which I would find odd because tips funds themselves have been in outflow territory for quite a while now, or GMO is making some shifts in its fund of funds allocations and picking up more of this portfolio, hence more inflows to this fund. So overall, taxable bond mutual funds, a pretty good week for them. Let's turn our attention now to bond ETFs. Again, they had inflows as well. Modest, though. Actually, let me change that. They had outflows this week, but rather modest. High yield was in, generally speaking, with JNK and HYG at the top. At the bottom, we saw treasury products with outflows. So overall, kind of a standard picture for taxable bond mutual funds, ETFs this week. One more group to take a look at, municipal debt funds. They also had inflows this week, $239 million. It's not a bad showing for them. They've done better recently, but given the turbulations in the market, it's understandable that investors might take a breather a little bit. So after a setback the last few weeks, we saw intermediate munis take in about $73 million, modest numbers. They were the second best. Leading the hit parade for municipal debt funds was high yield muni with about $150 million in net inflows this week. The final group to take a look at is money market funds. They too had inflows, which was quite a change in direction. So a little bit of cash is being put on the sidelines this week, $4.7 billion. That reflected two different attitudes about holding cash. We saw retail investors pull money off the sidelines, about $4.4 billion this week, while institutional investors put money on the sideline, about $9.1 billion. You net them out, we get net flows of $4.7 billion. Well, that'll do it for this week's analysis. Please join us next week, same time, and we'll reveal what has gone on with flows between money market funds, between mutual funds and ETFs, or join us online at lipperusfundflows.com to see if there's any up-to-date information. Thanks for watching.